Morning traders, Paul here with GammaEdge. Today is Monday, the 13th of June. Let's get started. So pause your player, please read this. It's important to you, it's important to us. Proceed once you agree. The market model is showing what we call the trash can, the USC. It's the all US composite cumulative tick. And this is all the regional exchanges. This is everything brought in. Why this is important to us is that because it is the trash can, it does show a lot of divergences and incorporates them in there. For those of you who were watching last week, you saw that the ARCX actually was above what we call the ribbon or the historical moving averages. And the USC, being a compilation of everything, failed to break that. So that was one of the major divergences, and we were warning about that all last week, that there was a separation. We weren't getting the broad participation. We did have improvement in the 52-week new high, new lows, but you can see as the week progressed, we failed on the Wednesday signal. Thursday got worse, and then of course Friday was a major sell-off, as you see here. Friday morning, large amount of selling from the larger players. This is the filtered cumulative tick, and this only advances when we have a large amount of either positive, which would have it going up, or negative, as you can see, orders being presented to the exchanges. And in this particular case, we were selling off across the morning, even though we had gapped down and were fairly stable in the SPX that you see here. But broadly speaking, the markets were selling off and selling off hard way into the early afternoon. Then we turned flat because most of the risk had been taken off, and you can see there was a little move upward in the SPX, but the cumulative tick continued to sell off and finish the lows of the day. We do look for continuation patterns across the open. We had this big gap down. We had another continuation pattern here. We feel that these are healthy. We do not like to see reversals off the open. Keep that in mind. And we did call out on Wednesday that we were in a confirmation of a downward move, that we had failed. And I would urge everyone to go back and look at the other morning calls just to see how we got there. Keep an eye on this. This will keep you out of trouble more often than not. And in fact, we haven't really seen where it's failed and cost anybody anything, really. So keep an eye on the cumulative tick if you're not. The index condition, just briefly, everything is as you would expect. We're seeing the addition of net negative gamma and reduction of net positive gamma. Part of that is because we've moved down in all these structures, and that exposes the puts, and that'll force numbers up. We're also seeing the addition of puts to the downside, so just be aware of that. Same thing here on the Qs and then IWM. Adding a little bit more on volatility here today. Over here on the left, you can compare it to Thursday's value, and you can see we're actually seeing calls go in, and we're seeing the puts drop on this net negative and net positive gamma. Now, as far as the VIX is concerned, it doesn't trade like a normal gamma condition, but it's useful to put it in the same perspective and the same tools that we look at here, just so we can see what is happening. And I'm going to do this going forward so everyone can track that. I will note that the positive gamma did move up to capture drops, so the black dot here, as these levels increase up, any drop, any recovery of the VIX will be monetized, or will put people in the money and allow some monetization. Over here in the expiring VIX, you can see the upside targets really are about at 35. There are high numbers, but we've got a major expiry coming up, and that's going to be important. Last trading day is tomorrow, Tuesday, and it expires before the open on Wednesday. So this is the monthly. This is going to be a big impact. A lot of the VIX is coming off, and so we'll want to pay attention to that. We're at the black dot. The zero is here. Again, we're not necessarily saying that this behaves the same way in a gamma structure, but it's useful to watch where we are. And you can see that once we get above 30, things get fairly overbought here, and we'll just have to wait and see what happens. When we take a look at the other expiries, the SPX, SPY, Qs, and IWM, the black dot is where we finished Friday. We're probably going to open up down in this area around the 3,800 down here. You can see the dominant expiry for today is at that 3,850. 380 here on the SPY, etc. And we're already below where the dominant expiries are. So we're going to have a lot of in the money. We talked about moneyness at length last night on the open mic. And because we are going to have a lot of moneyness here, deep in the money for a lot of this, that's going to be significant. And we feel that there could be some monetization. We also feel that a lot of these folks are looking for more downside. And we'll just have to see how the 0DTE builds out more puts and closes calls, etc., if that happens today. Different chart than what I'm used to presenting for you guys. This is the dominant SPX gamma structure. I wanted to put this up there because we're rolling into the JPM hedging structure at the end of the month. I actually have all the JPM funds modeled here. We're looking at gamma, and I am targeting the end of the month. And what you're looking at here, the blue line, is literally the end of the month. This is the expiry gamma. It's not flat because we have all of the JPM structures. There's 3 monthlies that are included in here, but the biggest one is the quarterly, which is at the end of this month. Questions have come in about why are we where we are, and you can see we're close to the zero in the overall gamma structure. I picked the JPM. We track several here, but the JPM is the dominant one right now, and you can see we're very, very close to zero gamma on a relative basis. We're going to open down here though today, and so we're pushing down in this gamma structure, and so I don't think we're going to get below these levels here at any time. That's 3,600. It's just a very unstable area. Haven't really ever seen us get that aggressive to the downside. One key thing I want everyone to realize is that you can see that at the end of the month, when the roll starts to occur, we're actually a net positive gamma here, but net negative gamma right now. So this means these will collapse into a zero line and then go positive a little bit. That's going to cause a little bit of havoc. This is not a standard setup. It'll be very interesting to see how this plays out as we go forward. Now note, there are many other structures that influence this. This is as Jen Carson talks about, this is a toy model, but it's a fairly good toy model, especially right now as we roll into the end of the quarter. So we put a lot of confidence in this, and just be aware that we've got some shenanigans going on, and we're going to want to pay attention to this as we approach the EOQ. The ES structure, we're in the middle of a roll this week. Here on the left is the ESM. That's the one that will complete the roll by Thursday night this week. Over here is the ESU, which is the September contract. I've highlighted the different levels in here, and you can see that we're, for the most part, we're dropping the zeros. We're only about 30%, I think, is in the roll, so a lot of it is still over here in the ESM. That 3,800 level you can see overnight was a key level. POI has dropped a considerable amount, which we feel is significant, but if we look over here, we see POI at 3,600. We feel that as the ESU builds out, we'll get a very good idea of what people are expecting. Down here on the bottom is the VIX, and you can see the VIX when I ran this was very, very close to that 32.5 level there. The 0DTE, fairly large, significant expiry for today. We've got dominant COI for the expiry up here at 40.50. No chance of getting up there as far as I'm concerned, and you'll see why here in a minute. 4,000 is another large expiry for today. Again, don't think we're going to get there. This is where we closed Friday. 38.50 is the dominant negative expiry for today, and we're probably going to open somewhere down in this area at 3,800. You can see to the downside there is not a lot of gamma, and we feel that is fairly significant here. We're losing liquidity as we go down the chain here. That is not a good thing. We could actually see some accelerations to the downside if we lose that 3,800 level. Obviously 3750 would be the first stopping point, and 3700, as you saw on the previous, is a possibility. When we take a look at the combo, and the combo is comprised of both the AM and the PM. We do not add the SPY into this, so the SPY nor is the ES added into this. It's just purely the SPX. A couple things to note here. Large negative number, extremely large negative number. A month ago I would have said this was, first in a long time. Now it's become commonplace. We're just heavily weighted to the downside. When we take a look here, 4100 is the upside plus gamma exposure plus GEX level. Doubtful we're going to get up there. You can see there's a transition zone up here. Want to call your eye over here. This is COI, the call open interest and put open interest for the entire SPX complex. These are not gamma or delta related. These are purely answering the question what strike has the most positive, or excuse me, the most calls and the most puts. Calls being the green bubble, puts being the red bubble, and you can see what that weighting is. This has been here for a while. The fact that they're coincident is nothing to read into, but just note with a 93 billion delta notional sitting here and this sitting here, highly unlikely that we're going to push above 4,000. I just can't see it happening. We closed here on Friday at 39. Again, 43 billion in delta notional sitting there right now, and that is an extremely large number coupled with a large net negative gamma level is going to make this very hard to get above this 3,900 level. Knowing, of course, we're going to open down here probably around the 3,800. Again, very large delta notional, very large gamma level. 3,800 really does have to hold here. Finally, I want to draw your eye over here to circle 7. 34% of the SPX is coming off on Thursday, Friday alone. And then between now and then, you can add in, the slices didn't show here, but it's about 40% of the SPX is going to rotate between now and Friday, and that's a big number. Taking a look at the expiration, of course, we're growing significant down levels here, as you would expect. The SPX structure, we are opening around the 3,800. By my estimates, 3,700, which is right down here, is definitely within view. We are a long ways away. This number has come down. For those of you who were watching last week, you saw this was up at 4,200. We have now lost 4,200 down to the 41 is the dominant positive level here. A lot of those calls were closed or expired and moved down here. You can see we've just got a lot to get through. We've got a lot of volatility ahead of us, I think. So what's the summary for today? So we are expecting this gap down. We think it's going to trap us under that 3,850 to 3,900 level just due to the large gamma and delta notional levels. The market model has reset to bearish 100%. Don't try to go long here. Short any bounces if they occur until the market model flips otherwise. The wing charts are incredibly bearish. We've got the net negative gamma growing and the net positive gamma dropping, so just be aware of that. And then the multi-day upside target is no higher than 40.50. If we do rally, we don't see it going any higher than that in the short term, and downside is incredibly volatile. 3,700 could be there, but realize liquidity is drying up as we get below 3,800, and that is some concern here. So that's it for today. If you like today's content, please come and join us at GammaEdge.us. That'll take you to a sign-up page that gets you into the Discord. 14-day free trial, all the tools turned on. Great group of traders, great information there, and would enjoy having your input. Follow us on Twitter, please. It's at GammaEdges with an S. And then here on YouTube, if you like today's content, please smash that like button. And of course, follow us so that you can get notified the next time we post some content. So with that, be safe. Hope everyone is either in cash or positioned correctly, and looking forward to seeing you in the Discord. Thanks, everyone.